Great. All right. Thank you so much for joining us today. My name is Kaylin Hessel, and I'm with the Oregon State Treasury. I'm the main point person in the state for the Oregon Able Savings Plan. Today, we're going to talk about, what it's like to actually have one of these accounts, talk about all of the different little details that are helpful to know while you go about life having one. So please, I want to make sure that we answer all of the questions that you have. So please add those in the Q&A in the chat. I will make sure to get to them. Okay, so first off, wanted to let you know some basics about how this program is set up. So the Oregon Able Savings Plan is a program that was created and is overseen by the Oregon State Treasury. We actually manage a couple other savings plans, the Oregon College Savings Plan and the Oregon Saves Retirement Plan. So what we do with all of those programs is basically oversee the direction, the big picture, make sure that Oregonians know how they could potentially benefit them. So for Able, we then partnered with Someday to be our program manager. What that means is that they're running the day-to-day operations. They're the ones who are keeping your money safe, managing those transactions. If you call our call center, they staff that as well. And Someday is actually based in New York. The reason that is because there's only a few financial institutions across the country that can provide the kind of banking services that you need to run a program like this. So when we put out a request for proposals to work with us, unfortunately, there were no banks in Oregon that applied, so we thought that Someday was going to be the best fit. But I want to point that out so that when you see on any of the paper forms that the mailing address is over at the East Coast, you don't get confused. It is indeed the correct address. And it's also a good thing to make note that our call center hours are currently modified because of COVID. Our staffers are working from home. So they're available from 6 a.m. to 3 p.m. Pacific time. We plan on extending those hours, as soon as we can and life gets a little bit more back to normal. But know that you can also send us emails and they'll get back to you. The call center is going to be a great place to ask any questions that are specific about your account. So if you're wondering, how much money is in my account, or, why am I not seeing this contribution in there yet? They're the ones who can actually look into that for you. At the end of the presentation, I'll include my contact information, and you're more than welcome to reach out to me with any questions, but I can't help with those kind of questions. I cannot look into your specific account. I can just talk about things more generally. All right, so the first thing that you are going to see when you log into your account is your online dashboard. This is basically all of the most important information that you're going to need if you are managing more than one account, like if you're a parent with two different kids with two different Able accounts. The first screen you'll actually see makes you choose between one of those. But then you'll see this as well. And pretty much most of the actions that you would want to take while managing your Able account can all be done within here. So I'm going to give you an example of what that looks like. All right, so here is a example. So over here, you've got the total balance. This person is doing quite well and has over $20,000 saved. You can see that she's made some progress toward her goal. We let people create goals so that you can kind of plan and budget for how much you think you can contribute this year. And as you put in money, that bar is going to grow, and you can see it inch closer to your goal. So this person also has a card, and she's able to see that she has almost $8,000 on her card, which is quite a bit. You can also take a look at the investments at a glance. So we can see that The majority of her investments are in our moderate investment fund, but 40% are in cash. And above the pie chart, you can actually see how well her investments have been doing. So it says that it's grown by 2.6% since she opened the account. And then the last thing, the bottom right-hand corner, is how many gifts have been given to her, how much money other people have contributed. So for each of these different sections, you can dive deeper. If you want to see more about what has been happening in the account, you can click this View Activity button. You can make a transfer to transfer money into the account or out of the account. You can load more money onto your card. And then at the top here, there's a lot of the same kind of things. At the very, very top is where you can change information like you can click on profile and change like your mailing address, information like that. All right, so one of the things that you get from us is a statement, and this is something that you can keep for your records that gives you an idea of how your account's been doing during that time period since the last statement. So they're going to show how much money was contributed or put into each of the investment portfolio options that you have in your account. It's going to show you the total amount that's gone in for the whole year as well. It's going to show you what withdrawals have been made. And it's going to tell you the total amount at either the end of the quarter or the end of the year, depending on when you get those statements. Now, the statement is going to talk about your current balance, and that's made up of two different parts you want to keep in mind. The first part is the principal, and that means that the amount that has been contributed to the account. So the amount that you, your friends, your family have put in there is the principal. So then if you are fortunate, it's possible that your money might have grown while it was in this account. If that's the case, that growth, that extra amount, is considered earnings. So when you are making a withdrawal and taking money out of the ABLE account, it's made up of both principal and earnings. All right, so you are going to receive a statement from us once a quarter. So every 3 months, we'll send you one, and you'll also receive one at the end of each year. So most of you are going to be enrolled in our electronic statement delivery system. So you'll receive an email from someday saying you can log in and view your statement. Some people may have chosen to have statements mailed to them. So if that's the case, you will receive them in the mail. And whether or not you're receiving these in the mail, it's always important to update your mailing address if and when you move. Just don't forget about us because we want to make sure that we can give you all the information that you need. Now, for accounts, sometimes you have a person with a disability who is considered the beneficiary, the account owner, and they're managing it all by themselves. So that person gonna get the statements. But if somebody else is managing the account for you, we call those people ALRs or authorized legal representatives. So in that case, you have the person with the disability and then the ALR who's managing it. It's the ALR who is going to be receiving a copy of that statement. Right, so contributions, you can put up to $15,000 a year as a standard contribution. If you are working and not saving for retirement somewhere else, then you can also make able to work contributions. So you can make an extra $12,760 or the total of your wages, whichever's less. So if you make $5,000 a year, you can contribute an extra $5,000. If you make $30,000 a year, you can contribute an extra $12,760. And we keep track of those things separately because we want to make sure that we are giving you access and the ability to save as much as you are entitled to. I want to point out that the money that gets put into the ABLE account can come from pretty much anywhere. It could be your own paycheck, it can be gifts, leftover SSI funds, if you're getting back pay, an inheritance, settlement, all of that can go in there. Basically, any legal source of funds you'll be able to put in here. And you want to keep in mind that you have to put in at least $10 each time you contribute. You have a few different ways to contribute to your account. The fastest way is by attaching a traditional checking or savings account to your ABLE account. So if you have a bank account at your local bank or credit union, you give us that information, basically creates a little bridge, and then allows us to easily move money from one account to the other. So when you want to move money, you just log into your ABLE account. You tell us how much you want to transfer into the account. And then it takes 3 to 7 business days for that to be completed. You also have the option of filling out a paper form and mailing it in. If you are doing that, you're going to want to include a check, and you want to make it payable to the Oregon ABLE Savings Plan. And this includes if somebody else is, contributing on your behalf, they're going to want to say that the check is payable to Oregon ABLE Savings Plan and not to your name. So if someone's contributing to my account, they'll want to say Oregon ABLE, not Kaylin Hustle. If you know that you want to save the same amount of money each month, you can set up automatic monthly transfers. So basically, you tell us that on, let's say, the 5th of every month, you want to move $100 into your ABLE account. You tell us that, and then on the 5th of every month, we will make sure to move that $100 in there. So you're going to want to pay attention to how much money is in your checking or savings account, and when you get paid, to make sure that you're transferring funds once they've, that you have in your checking account. For those of you who are working, you can also do payroll deduction. So we have paper forms that you can fill out and give to your employer. It explains to them how to send part of your paycheck directly to the ABLE account. And you can choose how much you want to send. Now, there are some holding periods you should be aware of. Holding periods are basically some kind of a pause that's put on certain parts of your account. So for instance, if you contribute money to your own account, there is a 5 business day pause before you can take it out. If somebody else is giving you funds, then there is a 20 business day pause. These holding periods are a safety measure. It's trying to make sure that people aren't, some kind of bad actor isn't contributing money, immediately taking it out. So I know that these can be inconvenient sometimes, but it's really there to protect you, to protect all of us. So keep that in mind as you're planning on contributing and taking money out. So if somebody else is going to contribute to your account, that would be called gifting. And anyone can contribute to your account. You can have 50 people contribute, you can have one person. The easiest way to do that is our online gifting platform. Basically, you create this little webpage, kind of like a Kickstarter or a GoFundMe, and then you can send that link to family and friends. They can click on it and directly put money into your ABLE account. That's the easiest and the fastest way to do it. But they can also contribute via a paper gifting form. So they can give us a check. They will need to know your account number and then make that check payable to Oregon ABLE Savings Plan. Now, let's say you have someone in your life who wants to put money into your account every single month. You might think that you should connect that bank account so they can do one of those automatic monthly contributions, but that is likely not going to be a good idea. Once you connect a checking or savings account to the ABLE account, that means whoever is managing the ABLE account can pull money out of the checking account. So maybe grandma wants to give you $25 each month, but she probably doesn't want you to have access to, all of her money. So it would be much better for grandma to just click on this link once a month or send in that paper form and the checks each month. Be safer for everyone. Okay, so when you're ready to take money out of your account, there are a few ways to do that. Only the account owner or the ALR, that person managing the account, can make withdrawals. You want to keep in mind that all of the withdrawals are supposed to be for something that is going to benefit the health, the independence, or the quality of life of the person with the disability. That is intentionally very broad, since all of us have a different idea of what's going to, give us a good quality of life. So they do that on purpose. If you happen to end up purchasing something that is considered a non-qualified withdrawal, there is a penalty for that. So the earnings portion, that's the amount, that's that extra growth. You're going to have to pay income taxes on that amount because you haven't paid any taxes on it before. And there's also a 10% penalty on those earnings. So let's say you take out $100 for a non-qualified withdrawal, and $10 of that is earning. You won't have to pay that income tax or the 10% penalty on the whole $100. You just pay it off of the $10 that were the earnings. When you are withdrawing money, if you need it to leave the account that day, we need to make sure that you have given us, that withdrawal request by 1 p.m. Pacific time. Since your ABLE account is technically an investment, that means that we have to operate on East Coast time and when the stock market closes. So we need it by 1 p.m. Otherwise, the withdrawal request will just start the next day. You can make these withdrawals by logging into your online dashboard or sending in paper forms. Now, I just want to remind you, if you do have questions, please put them in either the Q&A or the chat box. Another way to get money out is with our prepaid ABLE card. It works most like a gift card. So basically, you get this card, you decide how much you want to put on it, and you can only spend the amount that's on the card. This is not a debit card. So that means you're not going to be able to get cash back at the grocery store or get money out of an ATM. The card is managed by TrueLink Financial, and they have a separate website that you'll use to manage it. When you're in your ABLE account, you'll be able to click to get into that, the ABLE card website, but I just wanted to let you know that there is technically a different website there. Now, if there is a person with a disability, the beneficiary, and an ALR on the same account, they can actually sign up for 2 different cards. And there is a fee you should be aware of. It is $1.25 a month, whether or not you're actively using the account. So this option is going to be best for people who will be spending money on a regular basis. If you're saving up for retirement or something that's years away, it's not going to make sense for you to have one of these cards right now. Don't pay any unnecessary fees. Only get this if you're going to spend money on a regular basis. This card can be used at basically any store or website that accepts Visa, which is going to be most of them out there. To put money onto your ABLE card, you will have to move money directly from your Oregon ABLE account. Now, one of the unique things about this card is that there are optional spending controls that you can set. So for instance, every time I go to Target, I spend more money than I intend to because I'm a human being. Target knows how to get money out of my wallet. I can tell my card that I can't trust myself at Target. So don't let me spend more than $50 there at once. And then if I go to Target and I try to spend $100, it'll shut me down. It won't let me spend more than that. You can also set up controls so that you don't spend more than a certain amount of money each day. You can say, don't let me use it at these websites or these stores. If you only want the card to be for groceries, you can limit it to only work at grocery stores. All of that's optional. We just wanted to make it as flexible as possible so that it would work, as best as it can for your situation. And if you have a beneficiary and an ALR on the account, you can each get separate cards with separate spending controls. So for instance, this is a really powerful tool for any teenagers transitioning into adulthood to be able to practice managing their own finances. So, while the beneficiary is still a teenager, the parents would be managing their account. The kids sign up, give the teenager a card, and then have maybe stricter controls for that. But then the parent would also have a card that they might not control as strictly. Every time you use the card, there's going to be a transaction that is listed on the website. So you can log in, see a list of how you've been spending your money. You can sort it, organize it. If you want to upload receipts or make notes for each transaction, you can do that. So, my Target shopping trip would just say, I spent $50 at Target. I could add a note saying, I bought it for this thing, which is, a basic living expense. And I can upload a receipt to that just to keep track of everything. You can also set up automatic transfers from the Able account to the card. And let's say you are going to be using the card at certain places on a regular basis. You can tell the card to allow those transactions to happen. So for instance, let's say you're getting Netflix every month. You get the bill for that. It's the same amount of money each month. You could put the prepaid card in as the credit card that Netflix wants listed. It's not a credit card, it's a prepaid card, but you can put it on there. And then let's say you like to take a lot of Lyft rides. Every time you take a ride, it's going to be a different amount each time, but the card will know oh, it's Lyft, we can accept this. You can have up to $20,000 on the card. You can't spend more than $5,000 on it per day. If your card is closed, if it has a $0 balance for more than 4 months. So that's just so we don't, keep charging you fees after that. Kind of built-in protection for you. All right. Within the account, you have different options. You can choose to save or invest. If you're interested in saving, that's likely going to be the cash option. It's most similar to a checking or savings account. It is FDIC insured, so that means the federal government is guaranteeing that you're not going to lose any money in there. There is a 0.3% annual fee for using this based off of how much is in there. And there is an interest rate. So there's also the possibility that the money and a cash option will grow a little bit. The other ones on there are different investment options. First, we've got the conservative one. That is conservative or small amount of risk. The goal of that is to maintain the money that you already have and then, try to get it to grow a little bit. So there is a small amount of risk, but it's also only likely to grow a small amount. This is designed for a shorter timeline. And there's also a 0.3% annual asset-based fee here. Our moderate investment option has a moderate medium amount of risk. So the goal of this one is a combination of getting it to grow and to keep the amount that you currently have in there, your current income. So medium level of risk to try and get that investment return, that growth. And this is more for a medium time frame. So, probably several months, but it can also be an uncertain time horizon. So if you don't know when exactly, or for how long exactly you'll be investing for whatever your goal is, this could be a good option for you. The fee is a little bit higher. It's 0.35%, but that's not that big of a difference. The last option is the aggressive option. The goal of this one is to grow your money. So this has a higher level of risk than the others, but it also means it has a higher potential for return, so for your money to grow. But since there is a higher amount of risk, there's also a higher potential that you could lose some of those funds. This option is really designed for a longer investment period. So you're going to want to think like 10 years or more. Moderate, it could be maybe 6 months to several years. Conservative tends to be, maybe just a couple months. But again, all of this really depends on you as the individual, what your goal is, how comfortable you are with risk. If that is a terrifying thought, even if you're saving for, something that you won't be able to afford for 10 years, if you put your money in the aggressive option, it might give you a lot of anxiety. So that might not end up being worth it for you. So you're really going to have to figure out which of these options is best for you. So last thing is that the aggressive option also has that 0.35% annual fee. So within those options, you can choose to put all of your funds in the cash option. You can put all of it in one of the investment options, or you can split it up between one investment option and the cash option. You can change your mind and mix those up twice a year, and you can make those changes either online or with a paper form. So you're going to want to consider your risk tolerance, how comfortable you are with taking a risk, what you're saving for, how long you're saving for. Now, let's say you need to change some of your personal information. You can do that by logging into your account dashboard or mailing in some paper forms. So this kind of information will be like if your name changes, if your address or phone number changes, stuff like that. Every form you could ever want is going to be at OregonAbleSavings.com/forms. You can also just go to our website, scroll to the bottom and click on forms. Now, again, there's holding periods for changing certain kinds of information. If you change your address, there's 30 calendar days before we would be able to mail you a check to that address. Because we want to make sure that, it really is yours and that somebody else isn't trying to commit fraud on your account. So this is for your protection. There's also a hold for 30 calendar days after you've changed your bank account information. So if you have a checking account attached to your Able account, but now you want to attach a savings account instead, you can do it. You're just not going to be able to make an online transfer or withdrawal from the Able account to that savings account before 30 calendar days have passed. All right, so if you want to change who's going to manage the account, the way to do that is going to be with paper forms. So we call the person managing the account the authorized legal representative. And there's 3 different forms. You have a form for adding an ALR for the first time. you have a form for removing an ALR. So this would be if the person with a disability had an ALR and is going to manage their account themselves now. And there's also another one for changing the ALR to a different ALR. If you are removing or changing the ALR, we're going to need the original or the former ALR to sign that form. And we also need something called a medallion signature guarantee for all of these ALR forms. This is something that you can get from your bank or credit union. It's kind of like when a notary witnesses you signing something and stamps it, but it's a higher level. So the bank is, putting in some more effort to verify your identity, stuff like that. But talk to your local bank or credit union and they'll be able to help you get that sorted. All right, there are some tax benefits. So when you file your taxes, you can claim the Oregon State Income Tax Credit. This is true for anyone who's contributed to your account. If you have 5 different people in Oregon contributing to your account and they all pay Oregon State income taxes, they can all take this credit. It is a refundable tax credit, which is up to $150 for single filers and $300 for joint or married filers. What this means is that you can get up to a maximum of $150 or a $300 back when you file your taxes. Now, you have to put in a certain amount of money to be able to qualify for that credit, and that amount is based off of your income. So this ends up having more of an impact for low to moderate income savers. So if you are making less than $30,000 a year, for every dollar you contribute, you can get $1 back on your taxes, up to $150. If you're making between $30,001 and $70,000, for every $2 you put in the account, you can get $1 back on your taxes. So this chart on the screen has a breakdown of the different brackets and shows you how much you would need to contribute to get the full tax credit. We also have this available on our website under the FAQs. So if you want to find it again in the future, that is how you will do that. Now, there's also this federal tax credit called the Savers Credit. This was designed to help low to moderate income workers save for retirement, but they changed the law a couple of years ago to allow people saving in an ABLE account for themselves to also take this credit. So that would be on your federal income taxes. Up to $2,000 of your contributions may end up qualifying. This does all depend on how much money you earn. So you should go to the IRS's website and see what they say about the Savers Credit to see if you qualify. If you're using one of those tax software preparers like TurboTax or H&R Block, they ask you questions to figure out if you might qualify for these. So that is how you end up claiming these credits. It's when you fill out those taxes. Okay, that is everything I wanted to make sure that you knew. Please put any questions that you have in the chat or Q&A. Not seeing any so far. I'm going to share my email address with you. So if you have questions, comments, concerns, suggestions in the future, please reach out to me. I'm always interested in how we can make this program better for people.